Hello, welcome from Trend Signal, where we review the data and events the week beginning the 27th of March. Monday morning, the risk-off environment has definitely persisted into the start of this week. Got weak equities, weak dollar, strong bonds, very much a risk-off move, as I said. Strong US dollar-based commodities and strong emerging market currencies as well. British summertime, yep, we're back to the 5-hour difference between European markets and US markets. It's a symbolic week this week with the UK triggering Article 50 of the Lisbon Treaty on Wednesday. Not something that I believe is market moving. It's been very well telegraphed. It's been discounted for some time since the original vote for Brexit back in June last year. But we are heading into the unknown. It's never been triggered before. The triggering of Article 50 gives the UK and the EU 2 years to work out the details of the UK's exit from the EU. And of course, it's entirely possible that it could be longer than 2 years. Okay, just a quick look at what happened in the markets last week. Equity markets were weak. The FTSE down, Dow Jones, S&P all down 1.5%. The DAX had a better week, was unchanged on the week. The Nikkei, as usual, succumbing to a stronger yen, down 259 points, similar sort of move, about 1.4%. In fact, US equities probably suffered, not probably, I know they suffered their worst weekly performance since the November election of Donald Trump. So, yeah, certain things coming back to haunt Mr. Trump. President Trump. On the currency front, the dollar was weaker. The euro tacked on another 60 points against the dollar. Sterling was up another 0.8% or 80 points. Dollar yen down 137 pips. That means the dollar weakening or the yen strengthening further. Number of yen to the dollar, that is. Gold, not surprisingly, up $16. Any dollar-based commodities picking up, but gold especially strong there. Oil, mixed bag really, sort of treading water a little bit, but still lost 75 cents, which is fairly modest in relation to the last couple of weeks' moves, but still down, 1.4% there. Of course, the fall in the dollar was partly down to the Federal Reserve painting a less hawkish picture, I guess, than Wall Street was assuming. Equities had a nice golden run-up post-Trump election, and I think the Trump effect and the Trump reflation trade was really what's been helping the markets. And the trouble is that the markets have been discounting all of the good news, as they always tend to do. They can't really help themselves, to be honest. They're discounting the news before it actually happens, so we very much get the rumor buy the rumor, sell on fact scenario. And the problem is, here we've got the buy on rumor but no facts. In fact, the main negative last week was the proposed amendment to the Affordable Care Act, which most people refer to as Obamacare, that came and went. A curious sort of action really in the markets, but the bill was delayed from Thursday to Friday, and then Friday they pulled the bill in the end as they realized that this House Freedom Caucus, a right-wing group, that decided that they were not going to support the bill. And that was it, really. The right wing of the Republican Party felt that it had been softened too much. The left wing of the party decided it was too much of a change. There we go. That's politics for you. But I think the concern is that Trump is going to potentially struggle to get his corporate tax cuts through, his personal tax cuts through, and this big increase in infrastructure spending of whatever it is, $1.4 trillion. So all in all, it's been a slow start. The only thing that Trump has achieved, I guess, is he's wound up the security services and the judiciary somewhat. But there's been no war in Mexico, no ripped-up trade agreements, no death of any climate accord, no amended Affordable Health Care Act, etc. In fact, some are saying that his or Trump's legislative program has got off to the slowest start of any president for a long time. I guess people have likened it to a chief executive trying to run a country like it was a company. I guess ghastly stuff, politics, Mr. Trump. There we go. Let's have a look at the calendar. But we can see here just sort of some of the headlines. Stocks and dollar slide as slump as trade. Just get that out of the way. Trump trade fades from Market Watch. Dow futures notched triple-digit drop as doubts over Trump agenda build. So it's really is across the board, that same theme. So it's very much creating this risk-off environment in the markets, with equities falling and bonds rallying and the dollar falling. Calendar this week is incredibly light. That's the reason why I've been waffling on a little bit longer than normal. A very light calendar. There are a few central bank speeches early on this week. We've already had one of the key events, the German IFO Business Climate Survey, which is one of that very large survey of manufacturers and wholesalers and retailers, etc. That came and went at 9 o'clock on Monday morning, better than expected. So there's been a gradual improvement, certainly in the core economies in Europe. There are some concerns over the bond markets in the peripheral, especially Italy, but certainly, and I think that's what's catching a few traders out. See the dollar weaken the way it has done, given a bit of a kick by the Federal Reserve and a failure by Trump. But the Eurozone is certainly gradually picking up a little bit ahead of steam, and that's also having its effect. So data for the rest of the week, we got the Conference Board Consumer Confidence in the US on Tuesday at 3 o'clock. That is an important number. It's a leading indicator, something that is watched quite closely. Regular crude oil inventories, we had another build last week. It's extraordinary how this has continued. The final straw that broke the camel's back was a couple of weeks ago. Since then, oil has been under pressure and remains under pressure for now. Thursday, we got the final reading of the fourth quarter GDP in the US, a modest revision from 1.9 to 2%. And then we finished the week with the current account data from the UK at 9:30. All in all, a very, very light calendar this week. Let's see how this risk-off trade continues in the markets. We'll probably get more feedback from the Trump administration early this week as to what they intend to do. And it'll be interesting to see how the market reacts to the proposals for tax cuts, etc. That's it. Thanks very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.